Foreign currency transactions continued. Reporting at subsequent balance sheet date continued. Just to go through here, monetary item means what? Just to go through the language. And also non-monetary item means what is non-monetary item? Just go through the theory. Just go through the theory. Monetary item means non-monetary assets and liabilities other than monetary items. Example, fixed assets. So, monetary items are money held and assets and liability to be received or paid in fixed or determinable amount of money. Example, cash balance, accounts receivable and payables. And non-monetary item means non-monetary assets and liabilities other than monetary items. Example, fixed assets, inventories. Okay? If value is fixed in nature, then it becomes monetary item. Value may not be fixed. Other than monetary item, non-monetary item. That is how it is defined actually. So even loans, long-term loans, short-term loans, under creditors, payables, receivables, debtors, inventory, assets, investment, all these things are non-monetary items because their value may change. Their value may change. Okay? Why we are studying this one? Why we are studying this one means, so in the same category, in the same example, purchases $1 lakh and during the transaction date, the dollar, what is the dollar value? $1 lakh into 80 lakhs is my value. $1 lakh into 80 lakhs is my value. That is how I will account initially. Purchases $1 lakh into 80 equal to 80 lakhs. Assume this is happening on which date? I said this is happening on 16/10/2020. Okay? And assume on 31/12/2020. On 31/12/2020, X is paying to Y. X paid to Y. X paid to Y. On this date, on 31/12/2020, the dollar rate is 82 rupees. Dollar rate is 82 rupees. While purchasing, the dollar rate is 80 rupees. While paying, the dollar rate becomes 82 rupees. 2 rupees increase. So while paying to Y, I will pay $1 lakh into 82 rupees. Is how much? How much I will pay? 82 lakhs I will pay. Initially, while booking, it is 80 lakhs, but while paying, it is 82 lakhs. Whether it is an excess, whether I am paying excess or I am paying less, whether it is a loss or gain to me. Just tell me whether it is a loss or gain to me. Loss or gain. Just tell me your answers. It is loss or gain. Loss from Bhupaji. What about others? What about others? Loss from Preeti. Loss from Priya. Swati loss. Then Darshini, loss of 2 lakh rupees. Correct. So, correct, all of you correct. So, extra 2 lakhs, I am paying because of forex difference. Extra 2 lakhs I am paying because of forex difference. Now the question is how to account this 2 lakhs. How to account this 2 lakhs? How to account this 2 lakhs? As per AS 11, we have to account this 2 lakhs by debiting P&L account. Debiting P&L account by 2 lakhs. As an forex expenses or forex loss. Okay? Forex expenses, we have to debit this 2 lakh additionally. Okay? This is one scenario. What I discussed is one scenario. This is one scenario. If this is the scenario, then no problem. Within the same financial year, because I purchased on 16/10/2020 and I paid on 31/12/2020. So both are in same financial year 2021. So on this financial year itself in P&L account, I will debit that 2 lakh, additional 2 lakh. But the next scenario is second scenario. This is called reporting at subsequent balance sheet date. Reporting at a subsequent balance sheet date. What do you mean by this reporting at subsequent balance sheet date? The same first scenario. What happened? 16/10/2020 purchased $1 lakh of material. On that date the rate is rupees 80. So I booked as 80 lakhs. This is my purchases. And I purchased from X to X account credit 80 lakhs. So the next scenario, as per the next scenario, up to 31st March 2020. Up to 31st March 2020, no payment. No payment means I am not paid to Y. X is not paid to Y. On 31st March 2020, this X will become our sundry creditors. Why? Because no payment to Y. So Y will become sundry creditors to us. On balance sheet, what happens? I have to write sundry creditors. Initially I booked for 80 lakhs. So I am writing 80 lakhs. So this is what we have to do actually. But as per AS 11, so as per AS 11, what happens? As per AS 11, what they are trying to say is reporting at subsequent balance sheet date. In this scenario, what they are trying to say is they are classifying the items into two categories. One is monetary item and another one is non-monetary item. So monetary item means, as I said, cash, then receivables, then payables. Non-monetary items, what I said, fixed assets, inventory, investment, all these things are non-monetary items. So what they are trying to say is, in case of AS 11, reporting and subsequent balance sheet date means, as I said, 31st March 2021 is the subsequent balance sheet date. Correct? Because transaction is happened on 16/10/2020. On this date, what happened? Still the payment is not made. Still the payment is not made. On this case, they are classifying the assets into two categories: monetary item and non-monetary item. Sundry creditors is a monetary item or non-monetary item. Sundry creditors is a monetary item or non-monetary item. Just tell me, sundry creditors is a monetary item or non-monetary item? Sundry creditors is monetary item or non-monetary item? Put your answers. Sundry creditors, monetary item or non-monetary item? I have to pay 1 lakh rupees, $1 lakh to my wife. Whether I should pay $1 lakh or I should pay some other figure. Forget about exchange difference. You think about the nature of transaction. Monetary item from Darshini. What about others? Swati monetary item. Swarna monetary item. Preeti monetary item. Sweta monetary item. So, correct. Because amount is fixed in nature. So as per AS 11, what they are trying to say is, in case of monetary item, during the balance sheet date, we are presenting that item as a sundry creditors in balance sheet. We are presenting that item as a sundry creditors in balance sheet. What they are saying is, apply some other rate. What is that rate? Apply some other. It means apply some other exchange rate. Apply closing rate. Apply closing rate means closing means I am finalizing the balance sheet. I am closing my books of accounts. That is closing. Closing rate means closing the books of accounts. I am closed on 31st March normally. Balance sheet is prepared on 31st March 2020. Apply closing rate date. Apply closing rate date. On this date, on 31st March 2020, whatever the rate, I have to apply that rate. For example, on 31st March 2020, the rate is rupees 84. Okay? Initially, when I purchased, the rate is 80. Now it becomes 84. What I should do is, sundry creditors, I have to revalue it as 84 lakhs. Because 84 into $1 lakh, 84 lakhs. Okay? I have to revalue this item as an 84 lakhs because sundry creditors is monetary item. Then what about non-monetary item? That I will explain. Monetary item is important. For monetary item, we have to apply the closing rate. Closing rate means balance sheet date. 31st March 2020 is the closing rate because that day only I am closing my balance books of accounts. On that day only I am preparing my balance sheet. On that date is normally 31st March 2020. On that date, whatever the rate we have to apply. So 84 lakhs. Now you can ask me, sir, initially we booked for purchases 80 lakhs and no payment made. Till 31st March. So we are presenting that item as a sundry creditors in the balance sheet. We are presenting that item as a sundry creditors in a balance sheet. So while presenting this item as a sundry creditors in balance sheet, sundry creditors is a monetary item. Sundry creditors is a monetary item. Monetary item should be presented by applying closing rate. Closing rate means 84 rupees. Balance sheet date, my exchange rate is 84 rupees. So what I should do? $1 lakh into 84 equal to $1 lakh into $1 lakh into 84 equal to 84 lakhs. That we know now. Point is, initially purchases 80 lakhs, but the sundry creditors becomes 84 lakhs. So extra how much? 4 lakhs. Extra how much? 4 lakhs. Is a loss or gain for the company? Loss or gain for the company. I have to pay more or I have to pay less as on 31st March. Just put your answers. The loss or gain for the company. Extra 4 lakhs is a loss from Sweta. What about others? Bhupati loss. What about others? Preeti loss for company. Now the next question is. Now my next question is whether this is cash loss or book loss. Whether this is cash loss or book loss. That is my next question. Cash loss means what? Book loss means what? Whether it is a cash loss or book loss. Now the next question is this 4 lakhs loss is cash loss or book loss? Tell me that. Whether we paid this 4 lakh to wife, whether we paid or not paid, paid or not paid. 84 lakhs we paid or not paid, paid or not paid. Cash loss from Bhupati. What about others? Cash loss paid. As on 31st March, whether we paid or not paid. As on 31st March, tell me 84 lakhs we paid or not paid. Balance sheet I am presenting as a sundry debtors. Sundry debtors means whether it is payable or already paid. Not from Bhupati. What about cash loss from Vanishri? Whether on 31st March, whether this 84 lakhs we paid or it is payable. Not paid. If you not paid, payable only, not paid, because payable only sundry debtors will come. Paid means no sundry debtors, no. So if it is not paid, it is only payable. For my books of accounts, I am just presenting. Maybe when I am actually paying, the rate will differ. That day it may become 80, 78 also. So what I am trying to say is, this is not cash loss. This is book loss, because we have not made any payment, but still accounting as a loss. Understood or not understood? Cash loss means first example, first scenario only cash loss. Second scenario no cash loss. In this scenario we have not paid anything. Just we are presenting in our balance sheet. And we are 4 lakhs we are debiting our P&L account as a loss, but that loss is not cash loss, that is book loss. Actually it is not a loss. It is only for our presentation purpose we booked it. But in first case I discussed now. This first case. Look at this first case. Look at this first case. This is first case I said. What I said in first case? 16/10/2020 I purchased 31/12/2020 I paid. Same financial year I paid. While purchasing 80 rupees, but while I am making payment it becomes 82 rupees. So extra 2 lakhs I paid on same financial year. I settled my vendor. So there is no sundry debtors. I paid the amount already. In this case, we are accounting this loss as an in P&L account. This is actually a cash loss. This is actually a cash loss, because we are paying out of from our packet. But in second case, scenario, we are not paying anything actually. We are just booking in our balance sheet. Excess booking in balance sheet. That excess booking we are debiting to the P&L account. This difference you should know. This will be useful for cash flow statement also. Understood this point? Up to this understood? If you understood, message me as yes, you understood. Yes, you put, so that I will continue further. Yes, from Darshini. What about others? Yes, Honesty, Swati, yes, understood. Kavita, understood. What about others? Lil, understood. Yes. Sweta, put on box. What is that box? What about others? Shall I proceed further? So, why I am discussing this one? Why I am discussing this one? Because of AS11 I am discussing this one. Because of AS11 and the points given here I am discussing this one. So, foreign currency transactions, reporting and subsequent balance sheet date continued. Translation of balance sheet items that are denominated in foreign currency. The following principles apply. That is what we discussed. I am just explaining in theory actually. Apply closing rate. Apply closing rate. That is balance sheet date rate for monetary items. Apply closing rate. That is balance sheet date rate for monetary items. Monetary item means while presenting my balance sheet, which is having foreign currency impact, we are classifying that as a two category. One is monetary item, another one is non-monetary item. Monetary item means while presenting the balance sheet, I have to apply the closing rate. Closing rate means balance sheet date. I am closing the books of account. Closing as on 31st March 2020. On that date, what is the exchange rate available? That rate I have to apply for monetary items alone. For non-monetary items, apply transaction date rate or rate that existed on fair value estimation date for non-monetary item. Transaction date means initially whenever I am purchasing, for example, I purchased an asset during the year. In the middle of the year, I purchased an asset for some value in foreign currency. Same rate, same amount will be continued. We need not apply closing rate. While purchasing my fixed assets, I spent $1 lakh and the rate of exchange rate is 80 rupees. So 1 lakh into 80 lakh is the fixed assets worth. As on 31st March, the exchange rate becomes 82. I need not apply 82 for the fixed assets. 1 lakh into 82. So 80 lakh is enough. That is what they are trying to say here. Okay. Now the next thing is, this we know already. Now the next thing is how to account the exchange difference. That is what I already discussed. Exchange difference accounting is nothing but debiting to the P&L account, correct? Exchange differences may arise in following scenario. First scenario. This is we discussed now. This is just now we discussed it. Transaction relating to monetary item being settled at a rate different from the rate at which it is initially recorded. Settled within same financial year. That is first scenario. First scenario I said no. $1 lakh into 80. Today I purchased on 31st December itself I settled. Within the same financial year itself I make the payment. That is first scenario. Second scenario. This all things will applicable for monetary item majorly. Because exchange rate is different. Then what about the next one? Sundry debtors being reported at a rate different from the rate at which was initially recorded. This is also we discussed. Not settled and to be reported at balance sheet date. I have not paid anything. 31st March came. I have not paid anything. They are now my sundry debtors. For the years I have not paid anything to them. But I have to present as a sundry debtors. So sundry debtors, what I should do? Sundry debtors is a monetary item. So I have to apply closing rate. Closing rate means balance sheet date rate. On that date, whatever the rate, I have to apply that rate. And the next thing is third one. This I will explain now. Transaction being settled at a rate different from the one taken for reporting the last financial statement. Settled in subsequent financial year. So in this case, the same scenario. In this case, just take this example. What happened in this case? In the same financial year, So in the same financial year, yeah, this is what we are discussing now. Second scenario, you take it. Second scenario, what happened? Same financial year, no payment. Same financial year, no payment. Balance sheet, what happens? Balance sheet, what happens? I am presenting sundry debtors 84 lakhs. So further to this, what happened? This is financial year 2021. This is financial year 2021. I am in 21-22 now. Next financial year, because balance sheet is over. March 2021. Balance sheet is over. I am in the next financial year. What happened on 1st June 2021? I am making the payment for same case. Same for Y I am paying on 1st June 2021. On this date the rate is rupees 85. On this date the rate is rupees 85. Now tell me what is the loss? What is whether I am incurring loss or gain? Whether I am incurring loss or gain? Just tell me whether I am incurring loss or gain. Initial recognition 80 rupees. Balance sheet date, reporting and subsequent balance sheet, the rate becomes 84 rupees, 100 debtors. Then what happens? Payment, settlement or payment. Settlement date. This is 16/10/2020. This is 31st March 2021. Again 1st June 2021. I am making the payment. Settlement means payment. Okay. On this rate becomes 85 rupees. So this 4 rupees of loss already accounted in my P&L account for the year 2021. I am in 21-22 now. I am in 21-22. On this day, on this 1st June 2020, the rate is 85 rupees. So extra loss, how much I have to book? Additional loss, how much I have to book in 21-22? Additional loss, how much I have to book in 21-22? Share your views. From Swati 1 lakh. What about others? 1 lakh from Kavita. What about others? What about others? Preeti 1 lakh. What about others? Good. 1 lakh is the correct answer. Darshini 1 lakh. 1 lakh is the correct answer. Why? Because 4 lakh already accounted in the previous year P&L account. Additional 1 lakh. I have to compare 84 versus 85. I should not compare 85 to 80 because this thing already accounted. 80 versus 84 already compared. I have to compare only 84 versus 85. So 84 versus 85, 1 lakh additional thing. This thing should be debited to P&L account because extra loss. If it is a gain, what to do? We have to credit to P&L account. If it is a loss, debit to P&L account. If it is gain, credit to P&L account. So in this case, this is what explained in this case actually. Read the last para. transaction being settled at a rate different from the one taken for reporting the last financial statement. Last financial statement I took 84 rupees dollar, 84 into 1 lakh, 84 lakh. This year I am paying 1 lakh into 85 lakhs I am paying. So that difference 1 lakh is my expenses. So this is what we discussed. So the next page is for accounting exchange differences. Exchange difference may arise in the following scenario. So how to account this thing? Accounting treatment. That is what important. Please go through the accounting treatment. Recognize as expenses. Recognize as income or expenses in the period in which they arise for all the above scenario. Whatever it is, debit as an expenses and credit as an income. That is what important. Okay. That is what important. So this is what examination point of view. Till this very important. You can expect some 4 to 6 more questions. So I'll work out the problem of the input material. Okay. I work out the problem from the input material. Just to go through the question, please. Illustration 1 just to go through. Date of actual payment only you read it as 5611. Date of actual payment it is not 5612. You read it as 5611. Okay, it's not 2012. You read it as 2011. Date of actual payment you read it as 562011. Please go through the question. சொல்லுங்க. சொல்லுங்க. Okay. So by reading the question, what are the things you should able to understand? Exchange rate is given in the question 46.6. Goods purchased on 24/3/2011 for US dollar 46.6. Then exchange rate is 47 rupees. Then actual payment is 47.5. Exchange rate is on 31/3/2011. They have given 47 rupees. Date of actual payment is 5/6/2012. They gave to take it as 11. Okay, forget about 12. 5/6/2011, 47.5. Initial recognition, that is the first step actually. Initial recognition means date of transaction. Whatever the rate available, that rate we have to apply. Which date is the initial recognition date here? Tell me. Which date is the initial recognition date? Just share your answer. Which date is the initial recognition date? When the transaction is started? When the purchase is happening? Just tell me initial recognition date. Just message me initial recognition date. Hello. I hope all of you there. 24/3/2011 from Swati. Preeti, goods purchased date. Preeti, Bhubadi, 24th March 2011. Good. That is the initial recognition date. So you should write properly actually. You should properly means you have to explain. You have to explain in your answer. Not one line answer. One line answer is not enough. You should explain the answer properly. Like first thing, initial recognition. Okay. Under the initial recognition, you have to write as per AS 11. As per AS 11, whatever I gave you for initial recognition, that story you have to write. Initial recognition should be done by applying exchange rate available on the transaction date. That you have to write. Then you have to work out the answer. Then only you should work out the answer. What is the date? With the date you have to write 24 March 2011. So dollar 1 lakh dollar into rupees. How much? 46.6 equal to 46,60,000 is the initial recognition figure. Now the next question is whether the settlement, whether the payment, whether the settlement is happening in the same financial year or different financial year. You mentioned same or different. Whether the settlement, whether I am paying to vendor within the same financial year or different financial year. Same or different, you mention your answer. Same or different. Different financial year from Swati, different financial year from Darshani. Varna, different financial year. What about others? Different financial year. What about others? You can message me your doubts. Any doubts, you please message me. Just raising the hands. If you have a doubt, please message me. Rather raising your hands, just message me. What is your doubt? Tell me. Mr. Elil, you can talk in your mobile. Yeah, what is your doubt?
Sir,
Tell me. You raise your hand.
Hello?
Sir,
actually the problem is கொஞ்சம் டவுட்டா இருக்கு சார்.
மெசேஜ் பண்ணுங்க, நான் சொல்ற ரிப்ளை பண்றேன் உங்களுக்கு.
சரி, ஓகே சார்.
In continuation, same financial year. Why same financial year from Swati and Vanishti? Different financial year, same year, sir, from Swati. How is same financial year? Whether payment is made in same financial year or different financial year? What is given in the question? Financial year 2031st up to 31st March 2011. Up to 31st March 2011 is nothing but 2010 to 2011. Correct? Payment is happening when actually? As I said, payment is happening when actually? Payment is happening 5/6/2012. You read it as 5/6/2011. Okay? 5/6/2011 only payment is happening. 5/6/2011 which financial year? Same financial year. 5/6/2011 will come under 2010-11 or it will come under 2011-12. 2011-12 only it will come. So as on 31st March 2011, so as on 31st March 2011, no payment is made. As on 31st March 2011, no payment is made. Okay? No payment. On this date, what happened? On this 31st March 2011, it becomes reporting at subsequent balance sheet date. Reporting at the subsequent balance sheet date. Okay? Becomes what? Reporting at subsequent balance sheet date. So what we should do on reporting at subsequent balance sheet date? Reporting at subsequent balance sheet date. On this 31st March 2011, monetary items should be applied closing rate. So we are purchasing from whom? We are purchasing from whom? We are purchasing from, it is not given from whom we are purchasing, but we are purchasing. So that $1 lakh becomes sundry debtors. Why? Because we have not paid $1 lakh. So the sundry debtors is a monetary item. The sundry debtors is a monetary item. This sundry debtors is a monetary item. What we should do now? What we should do? So balance sheet, while presenting the sundry debtors $1 lakh, we have to apply closing rate. What is closing rate? What is closing rate? What is closing rate? Closing rate is how much? Is given in the question. Closing rate is balance sheet date rate. Closing rate is 47 rupees. Is my closing rate. What I should do? I have to account 1 lakh into 47 equal to 47 lakhs. Okay. Now exchange differences due to exchange differences due to reporting at the subsequent balance sheet date. Okay. What is the exchange differences? Initial recognition 46,60,000. Reporting at subsequent balance sheet date 47 lakh. So extra how much I am paying? Extra how much I am booking? Not paying. Extra how much I am booking? 40,000 rupees. Extra how much I am booking? 40,000 rupees. This 40,000 rupees is loss. Exchange loss. This should be debited to P&L account. Which year P&L account? Same financial year P&L account. What is the financial year P&L account? 2010 and 11. Okay. Up to this understood? Up to this understood? Put the yes, yes, yes. Up to this understood? Yes. Okay. Yes. Okay. So the next step is settlement. Settlement is happening. Settlement is happening on which date? 5/6/2011. Which is the next financial year actually. On this date, what is the rate? 47.5. So initial recognition 46.6. Reporting at subsequent balance sheet date 47. Then settlement. Settlement 47.5. So we have to compare 47 versus 47.5. So extra 0.5 into $1 lakh equal to 50,000 rupees. 50,000 rupees should be debited to P&L account. Now go through the input material. And complete this answer within 5 minutes. I will give you only 5 minutes. You should write your own English. You should not copy the input material answer. They have not given the proper explanation. You should give your own explanation. I will give you 3 minutes time. Just complete, and once you completed, message me completed. I will wait for 3 minutes. Once you completed, I'll go to cash loss. Sweta completed. What about others? Completed from Swati. What about others? Okay, then I'll move to the next problem. So before getting into the next problem, so as per till now, Okay. So before getting into the next problem, I would like to discuss certain points actually. The point is, till now we understood that any exchange differences should be debited to P&L account or credited to P&L account. If it is a loss, debited to P&L account. If it is a gain, credited to P&L account. That is what we discussed till now. Okay? Because that is AS 11. As per AS 11, we have to account the exchange differences in P&L account. Okay? That is our understanding. So, as per AS 11, they gave another optional accounting treatment. Optional means you can use it, the existing choice, or you can account that particular item in a different manner also. Optional accounting treatment means if you want, you can use it. You need not to, it is not a compulsory. So the point is, optional accounting treatment is nothing but in case of exchange differences, we are debiting to P&L account or crediting to the P&L account. That is what we understood. But in case of long-term forex monetary item, monetary item means what? Fixed in nature. Value is fixed in nature. Long-term means, for example, loans. Loans is not a short term, it is a long term normally. We have to repay more than 1 year. But in case of sundry creditors or small payables, it is short term. Short term, this optional treatment is not applicable. Only for long term forex monetary items. I borrowed from foreign country. For 5 years. Why I borrowed? I am going to buy an asset, fixed asset or capital asset. I borrowed money from foreign and I am going to use that money for investing in capital asset, depreciable capital asset. In this case, what happens? Every year I have to repay to my lender, correct? I have to repay to my lender. I will repay more or I will repay less. If exchange rate is more, I will have to pay extra amount to the my lender. Because while I am borrowing, the dollar rate is only 80 rupees, but while repayment, the dollar rate becomes 82 rupees. So at 2 rupees, what we have to do? 2 rupees, generally we have to debit to P&L account because extra 2 rupees we are paying. But in case of long-term forex monetary item, they give one more option. What is that option? Optional accounting treatment. In case of long-term borrowings related to purchases of depreciable capital asset, the exchange differences shall be added or deducted from the cost of the asset. The revised cost will be depreciated over the remaining life of the asset. So what they are trying to say? So what they are trying to say is, I borrowed. This is my balance sheet. I borrowed. For example, I borrowed $1 lakh. Okay. I borrowed $1 lakh, repayable in 4 years. Every year I will pay 25,000. Why I borrowed this $1 lakh? $1 lakh into 80 rupees. While I am borrowing, it becomes $1 lakh into 80 rupees. This is my loan. Initial recognition. 1 lakh into 80 lakh is my initial recognition. Why I borrowed this 80 lakh? No. To purchase the fixed assets. I am borrowing 80 lakh rupees from foreign. I am purchasing the fixed assets worth of 80 lakhs. Okay. So what happens after 1 year? I have to repay. But I have to repay before while repaying. What happens? My dollar rate becomes 82. So my total loan value becomes 82 lakhs. I have to repay 82 lakhs to my lender. So what I should do? 80 minus 82, 2 lakh rupees should be debited to P&L account, correct? Should be debited to P&L account. That is what we studied till now. But in case of optional accounting treatment, instead of debiting to P&L account, I will not debit to P&L account. Rather, I will. This is an expenses. This is loss actually. This thing I will add with my cost of the asset. Exchange loss, 2 lakh rupees. So my asset value will increase. 80 lakhs plus 2 lakhs, 82 lakhs. 80 lakhs plus 2 lakh, 82 lakhs. My revised cost of the asset is 82 lakhs. Okay? This is what given there. Understood or not understood? This is what given here. Just to go through the theory. In case of long-term borrowings related to purchase of depreciable capital asset, the exchange differences shall be added or deducted from the cost of the asset. The revised cost will be depreciated over the remaining life of the asset. This is optional only, not compulsory. You can use the existing method. Existing method is only debiting to P&L account or crediting to the P&L account. But in case of optional accounting treatment, instead of debiting or crediting P&L account, you can add that loss or gain. You can adjust that gain with the cost of the asset itself. So no impact in P&L account. Okay? This is an optional accounting treatment. Optional accounting, not compulsory one. So with this understanding, we have to solve this problem. With this understanding, we have to solve the second problem. Just to go through the second question. And while going through the answer, you should tell me which method they followed. First method, that is existing accounting treatment method or optional accounting treatment method. Which one they followed while reading the answer, you should tell me. First you read the question. Just to go through the question. So as per the question, what is the question? A Limited purchased fixed assets costing rupees 5,100 lakhs on 1/1/10, and the same was fully financed by foreign currency loan payable in 3 annual equal installments. Exchange rate $1.42.5 and 45 as on 1/1/10, 31/12/10. First installment was paid on 31/12/10. The entire difference in foreign exchange has been capitalized. You are required to state how this transaction would be accounted for. This is the question, correct? This is the question. So, what is the question? So, as per the question, A Limited is purchasing fixed assets 5,100 lakhs. How they are purchasing? By borrowing. It is given in the question. By borrowing they are purchasing. What is the dollar rate when they are purchasing? 5,100 lakhs divided by 42.5. When they are purchasing on 1/1/10 they are purchasing. 1/1/10 what is the rate? Dollar rate. 1/1/10 dollar rate is 42.5. So 5,100 lakhs is in rupees divided by 42.5 rupees per dollar equal to how many dollars? 5,100 divided by 42.5 is how much? I think it is 120 lakhs dollar. So how much they borrowed? 120 lakhs dollar they borrowed. For purchasing what? For purchasing 5,100 lakhs machinery. Both are same only. It is in dollar, that is in Indian rupees. So what happens? This is my balance sheet. Liabilities, assets, loan, initial recognition, 120 lakhs dollars into 42.5 equal to 5100 lakhs is my loan amount. Asset 5100 lakhs. This is my initial recognition. What happens at the year end? 120 lakhs divided by 3. Why divided by 3? Because 3 annual installment. 3 annual installment mentioned in the question. So 3 annual installment is, per annual installment how much I am paying? 40 lakh dollars. I am going to repay. So what will happen? What will happen? What will happen? So 120 lakhs minus $40 lakh dollar repayment of loan, repayment of principal. 120 minus 40, closing balance is 80 lakh dollar. Okay. What I will do? Forget about the optional accounting treatment. Forget about optional accounting treatment. General accounting treatment. What I will do? Initially, my monetary item means what? Monetary item is asset is a monetary item or non-monetary item? Asset is a non-monetary item. Monetary item is my loan. Loan initially 120 lakh dollar, 5100 lakh rupees. 5100 lakh rupees in rupees. Okay. What happened at the year end? Year end, 2 activities. One is payment. Payment how much? 40 lakh dollar paid. And balance how much? Balance how much? 80 lakh dollar. This is my balance loan. 2 things happening. One is settlement. Settlement is 40. Reporting at subsequent balance sheet date. This balance loan is monetary item. Balance loan is monetary item. This is 8 lakh. So 40 lakh is settlement. 80 lakh is balance, reporting and balance sheet subsequent rate. Initially 120 lakhs. So what I should do? Initially it is 42.5. Initially it is 42.5. So 40 lakh dollar I am repaying. At what rate? 45 rupees. Just go through 31st March. What is the rate? 31st March. What is the rate? It is 42. 31st March, or I think it is accounting period. Not, this is calendar year, not financial year. So December, 31st December. 31st December. What is the rate? 45 rupees. So initially what is the booking? Initially how much I booked? 42.5. While making payment it is 45 rupees. So 40 lakhs dollars into 45 minus 42.5, 2.5 rupees equal to 100 lakh loss. This is for settlement. This 100 lakh should be debited to. This 100 lakh should be debited to P&L account. This is one activity. Second activity is reporting at subsequent balance sheet date. Second activity is reporting at subsequent. How to report? This is my balance sheet. Opening balance 120 lakh dollar minus payment settlement 40 lakh dollar. Closing balance 80 lakh dollar into 45 rupees. 45 into 80 lakh into 45 rupees. 80 lakh dollar into 45 rupees how much? 80 lakh dollar into 45 rupees how much? 80 lakh dollar into 45 rupees how much? Why it happens with this? Just message me $80 lakh into 45 rupees, how much? $2.5. 16 means $200 lakh. Is an 200 lakh rupees. Is an expenses debited to P&L account. So totally how much is debited to P&L account? So totally how much is debited to P&L account? Totally how much is debited to P&L? So 300 lakhs. How 300 lakhs? For settlement. For settlement. For settlement. For settlement how much? Settlement equal to rupees 100 lakhs debited plus reporting at subsequent balance sheet date. Equal to rupees 200 lakhs debited to P&L account. Okay, so totally 300 lakhs. Totally 300 lakhs. This is the general accounting treatment. This is what correct answer. As per existing thing, this is what correct answer. But optional accounting treatment is also available for certain items. Optional accounting treatment is available. Optional accounting treatment available. Available in case of long term foreign currency is used. So as I discussed with you, if long term foreign currency is used for purchasing fixed assets, instead of debiting to the P&L account, the loss can be added with the cost of the asset. So you can give answer number 2. Answer number 2 for the same question. What is that answer? So what is the total loss? What is the total loss we arrived? Total loss equal to 100 plus 200. My Excel is visible to you, correct? You are able to view the Excel, correct? Total is 300 lakhs. 300 lakhs. So what I should do? My asset value is 5,100. My asset value is 5,100 lakhs plus exchange difference. Why I am adding? Because this is loss. If it is a gain, I will less. 300 lakhs. Revised figure. Revised asset figure. Revised cost of the asset. 5,100 plus 300 lakhs. 5,400 lakhs. This is another answer. Answer number 2. I will not debit to my P&L account. Rather, this loss can be added with my cost of the asset. Understood? But institute they gave one first answer actually, that they are debiting the P&L account. But you can write the another answer also. You can write the another answer also. Optional accounting number 2. You can write the another answer also. Understood or not understood? Understood? Next problem they solved by the second optional actually. Next problem they solved by the second answer. Next problem they tried to solve by the second optional actually. Any doubt in this problem? Any doubt in this problem actually? You can ask me any doubt in this problem. Sir, fix